Okay, big challenge today. Almost at my maximum daily loss for one account. And I don't want to keep taking trades long if the thing is looking bearish. Like, for instance, a 3-bar reversal strategy that I have is good when things are in the bullish side, when things are going, you know, when the moving averages are traveling up and price can dip down into them, but if the moving averages are traveling up, right? Like even up to this area here, it's still okay to look for 3-bar reversals or our long patterns. But now we have a situation where price is underneath the moving averages and they're going this way. Why am I trying to go long? So I want to stress in this video that I have got to stay on the right side of the market using the 15-minute chart. Okay, let's look at the 15-minute chart and we can see what I'm talking about here. For instance, I shouldn't be going long when price is below the moving averages and the moving averages are going this way. I shouldn't be long. Once price climbs above the moving averages and they start pointing up, right here, they start going up, right here, right there. Okay? Now, that doesn't mean they're going to go up. The price could continue down. I don't know, but that's the area that I can look for longs. Anywhere in this area here, even, that's the lowest point. Once price starts coming down here, and if it didn't pop back up, if it consolidates like it is doing, like it's doing right over here, now it's underneath, like right here. This is a very dangerous area. Price consolidating below. Once it gets above, it's better. Once it gets above, it's better. Once it starts expanding upward. See, this is a good dip right here because all the moving averages are above one another like they're supposed to be. And then when it comes down into this area, look for a 3-bar reversal to go up. That would have been the best trade right there. Okay, but right now, if I'm trying to go long with the price below the moving averages, and it's clear to me it's below the moving averages, and they're coming down this way, I should not try to be long yet. Get it through your skull. Now, it may bounce here. It may. Just you cannot be perfect with trading. You can reduce your risk. I want to find less risky trades. A less risky trade. Sometimes the most risky and dangerous trades will be the most profitable. That's not my trading system. I'm not trying to get it at the absolute lowest point when it looks like it's completely crashing and going bearish and trying to go long just because I want to get the best price. That's not my process. I'm not going to trade that way. I guess some people do, and it might work. I'm looking for 3-bar reversals when the patterns are going this way and they're bouncing off that kind of area to the upside. It's less risky. Will they work? No, it doesn't mean they're going to work every time. I'm not saying that what I'm doing is going to work every time. What I'm saying is less risky. Less risky. I'm trying to reduce the risk. Like right here. This is a very, very dangerous place to try to go long, even though you got range traders who do very good in this. And it's possible to try it a couple times. I'm not saying I don't have a strategy for that, but my 3-bar reversal strategy is not going to work when price is expanding in a downward position to go long. 3-bar reversals you're going to be looking to short it. All the 3-bar reversals are up here. So let's just say that I have to take a trade today. Well, if I take a trade today, it's just a no trade minute, because if the 8's above the 20 and the 20's above the 50 and they're flat, it's still bullish to me. Once they start going this way, the risk is stronger. And once the 8 crosses any of these and they cross, then you got to really go short. So the 8 is about to cross the 20. The 20 is still above the 50, so it's just starting. If it consolidates and continues in this area, once we see the 8 cross the 20, and then you see the 20 cross the 50, and they're all pointing down, then that's when it's the best short opportunities and the least risk. Okay, I hope I understand what I'm saying to myself here. I want to trade the least risk and the best setups, not just jump in along and have to do a long because I want to make back the money that I lost. Okay, and I want to go long because I was in the long mindset. Well, things changed. I was in the long mindset over here. See this? I was in a long. Why would you not be in a long mindset? There was the best 3-bar reversal right there, right? And so what happens was, once the moving averages crossed each other, right? Then you got 3-bar reversals going down. Here's another one. Here's another one. And they're all going down. So I want to meditate on this video and understand that I have to be on the right side of the trade. And the right side of a trade is the least risky side of a trade. Peace. Okay, what's wrong with waiting? What's wrong with waiting? Now, price has gone from being under the moving averages to being above the moving averages. But the moving averages are not in the proper order, meaning the 8 and 20 and 50 are all under each other instead of over each other. You want the 8 to be above the 20 and the 20 to be above the 50, expanding upward. But you do have them pointing up, which is less risk. It's less risk to go long when the moving averages are pointing up. It's more risk when the moving averages are pointing down. So they're pointing up, and we got a strong volume, and it took out this pivot. So I'm willing to take a trade. It's not the best, but it's less risky than trying to go long way down here. It's less profit, but it's less risk. The most profitable would have been as soon as it did the liquidity sweep right there, hit a turtle soup on it, start to go along with that 3-bar reversal right here. I got in late. Got 1, 2, 3. Well, the 4th bar went over. That's where I should have gotten long. I got long a little bit higher than that. And we're long. I should have gotten on because of a turtle soup. That was my thinking. See, it just poked below that red line, which was that overnight low. It poked and it started sweeping up. So that's a different strategy than the 3-bar reversal, which requires, for me, requires the moving averages. I guess a 3-bar reversal, I need to rethink it. Could also be used for any strategy, for turtle soup strategies, for liquidity sweeps, for range trading. I was just describing the 3-bar reversal pattern for a moving average strategy. So I need to rethink that and maybe add that to my understanding, which a 3-bar reversal is not only used for moving averages. So if I have to have the moving averages this way with a 3-bar reversal that I'm looking for, well, there's other ways to play the 3-bar reversal. You can do a pivot sweep, a liquidity sweep, and then look for a 3-bar reversal. And that's also a valid moment or time. The problem with that is it goes against the moving average strategy. So some strategies are conflicting with each other. The moving average strategy says the moving averages cannot be going down like this for a long. But the liquidity sweep or range trading strategy says, forget the moving averages, go with structure, look for 3-bar reversals based on structure elements. So it depends on which one you want to use, moving average strategy or the structure strategy. 3-bar reversals are excellent for either one. All right, let's conclude this video. Yes, even when things are going in your favor, it doesn't mean it's going to work out. So it started to go above the moving averages, and then it just collapsed. So let's take a look at this thing here and see what happened. If I was going to go look for a 3-bar reversal with using the moving averages, then I would want the 3-bar reversal somewhere in here happened, and it just quickly came down. I don't know if I would have gotten a 1-to-1 right there or not, but we are starting to go. Let's take a look at this. Once you get see, it starts to come back under. So there's really not a 3-bar reversal where the price is above the moving average, or the moving averages are all going up like on this side. All right. Moving averages cross down, price comes under, and so I'm looking for a 3-bar reversal to go long. No, I should be looking for a 3-bar reversal to go short. Okay. 3-bar reversals in this area to go short when price is under the moving averages. 3-bar reversals to go long when price is above the moving averages. And then stay out of the market when it's confusing. Okay, so let's see. If I was using the 10,000 tick chart to keep me on the right path, then I would be using the 2,000 tick chart to get in a trade perhaps. So let's take a quick look at this, because price started going above the moving averages and started going below the moving averages. Let's see, today's the 24th. I'm looking for right here. Okay, over here on this side, right here, price fell below. All right, right here. Okay, so in this area right here, I'd be looking for 3-bar reversals to go short. Right here. All of this. Okay. So if I would have got this one right here would have failed, it would have stopped me out. But this one, there's 2 of them right here, but they both would have failed with this pull up right here. So if I tried that one would have worked really good. This one would have worked good. This one, you might have got a 1-to-1 on that. This one would have failed. This one would have worked. This one would have failed. Man, what a mess. This one would have worked really good. And this would have been the home run right here. Here's a great one that worked really, really good. Here's another one that worked really good. Once you get towards the bottom, you might get a 1-to-1. But that's interesting to me to keep an eye on what I'm looking for here. All right, so to conclude the video, I'm trying to understand the 3-bar reversal pattern can be used with just price structure, or it can be used with moving averages. Which one's better? I do not know. If I were to use the 3-bar reversal on these pivots down here, well, that's where we're at right now, but earlier when it was at the top, that thing bounced really high, and that would have been a good little spot to bounce it up. 3-bar reversals to go short when price is under the moving averages, if we're using moving averages, or above moving averages, we're going to go long with 3-bar reversal. Okay,